Welcome to our weekly market analysis. This is for the week of April 20th, 2024. And this week, we will be looking at upcoming PCE numbers, which are coming on Friday. And generally, PCEs are a little lower than the PPI numbers, and that's the one that the inflation number that the Fed follows. The other thing we have to pay attention to, and I mentioned last week, the volatility in the markets, what's going on. And of course, with the geopolitics and with the Israel, Iran, Ukraine, Russia, Middle East, that all has affected. But I think underlying, there's other things going on, which brings me to the third segment, which is the sector rotation. Is something happening with technology, especially with the semiconductors? What is happening with the commodities, for instance, the defensive sectors, healthcare? So are we seeing the movement from technology, let's say, to other sectors? This week, it's really the major earnings really heating up. We have Meta, Microsoft, Google, and it continues with Intel, Boeing, Visa. So there's quite a few that I'd like you to pay attention to, especially if you're looking for some trading ideas. Last week was another down week. We talked about the Dow last week, whether it's being the leader. And now the question is, after again what happened on Thursday night with Israel, going back after Iran and around Isfahan, is this done? And are we oversold in the markets? Are we going to have a little bounce, or are we going to get to the correction mode? So we will review that through the charts. So as far as the economy, there was not really major happenings last week besides the retail numbers. So this week, what you want to pay attention is on Thursday at 5:30 a.m. Pacific Coast time, or 8:30 a.m. East Coast time. We want to look at the GDP quarter over quarter. And as I mentioned, I think the big number we want to look at is the core PCE. And we want to see how they are behaving and whether this inflation numbers that we've had from CPI, will they be confirmed with the PCE? Again, the rates have been going up, as you can see globally. When we look at the 10-year, the UK gilts, the 10-year, which are the United Kingdom, and also German bunds. So we see that the movement in all three of them. We still got the negative spread, or the inverted yield curve, 10-year and 2-year. So let's take a look at the markets. Well, it's interesting. The Dow was really flat. That was the only market really didn't do much after, there's been a lot going on in the past few weeks. But we can see NASDAQ was down 5.5%. As you recall, especially on Friday, we had the NVIDIA and then Netflix. So, and semiconductors as a whole, and S&P was down about 3%, which is again between Dow Jones and NASDAQ. Gold was up 1.86%. Copper was up 4%. And crude oil actually retraced. And it's interesting. Maybe we'll just debate that and discuss it. What happened, and what happened on Thursday evening, for instance, after when the Israel decided to send rockets to Iran. So as a whole, where we are with NASDAQ, we are 7% lower, 7% from this April 11th highs. And generally, you have to remember, when we get to the 10% and over, then we get to the correction zone. Now, as a whole, the markets, they were down 3%. But one thing you will see is the value sector has been really where the funds flown this week. And as I mentioned, there's been more of a defensive mode, but from the beginning of the year, especially actually since the beginning of 2023, it has been the growth which has been the story. So when we look at, for instance, the comparison large cap and growth versus value, you can also look at the mid cap growth versus value, as well as small cap growth versus value. That's where the money had gone. As far as the sentiment goes, it's interesting how all of a sudden the things change, especially from the geopolitical side, and we see finally we are getting very close on the AII sentiment. We go getting close to the averages for the bulls, and also the bears. Actually, we got a big jump in the bearish mood. Even the CNN fear and greed, the seven factors. Now we were in the greed, went to neutral last week. Now we are in the fear. Where I pay attention is extreme fear. That's where really presents itself as a buying opportunity. On the other hand, we looked at Citigroup. We've been looking at the panic euphoria, and we've been warning beginning of end of March. We've been in this euphoria zone, and we're still there. So that hasn't changed much. So looking from the charts from the Fibonacci number, as I go back to the August of last year, what we see is we've talked about this the 200%, and then obviously we're looking at the 2033. I went 238%, which was a 5303. We came very close, about 5300, a little lower than that. That became the really almost a double top. And last week we said pay attention to this 5111. And once we broke the moving averages, we're looking at the 8-day, 21-day. We thought that will be 50-day and that 5111 will offer support. Well, we broke through that. As a matter of fact, what you can see is we have a death cross. What that means is that 21-day is crossing 50-day. So the question is, S&P, there has been a lot of damage done, at least in a short term. And what we see is perhaps if we are going to go to that 4,900 area for some support. So that is, we need some consolidation, and unless, again, we might hit that and have a bounce back to one of these moving averages. So as I mentioned, we look like in some of these indices we're oversold. When we look at the daily on a Bollinger Bands, on the other hand, we can see that, well, we are close to that 100, the moving average at the 49.34. So that's what I mean. I think we've got some support there. Otherwise, is a 48.08 as a support. We are oversold, almost embedded on the stochastics. The MACD was giving you the warning sign a few weeks ago, beginning of April. We could see that we hit the Bollinger Band, and then obviously stochastics, and then MACD crossed. So just be aware of that. The Bollinger Bands were narrowing, and now we have completely expanded. So we are outside the Bollinger Band. That's why I mentioned, are we oversold, and are we going to have a little bounce? NASDAQ has had a lot of damage done, though. NASDAQ broke below its 100-day moving average. We had talked about that it was overbought. We could see the divergence, and then MACD had given us that message. We thought we might have a support in 100-day moving average, but no, not such a luck. So it's been a lot of damage done, again, because of the semiconductors. As far as the weekly goes, we have broken below that 18-week moving average. The momentum is down. MACD on a weekly has crossed. So we might have a little support on the lower edge of Bollinger Band. So we got some, again, I'm talking about rotation, as we see in the next few charts, that its technologies, taking the burden, especially with the interest rates being up there. Are they giving us a message? Now, Russell, on the other hand, which had broken below, it broke below its 100-day moving average. It is embedded. So now it's telling us, with the Bollinger Band expanded, it's consolidating a little bit. So we see that on Friday, well, markets were down, S&P was down. Actually, the Russell was up a little bit. So are we again looking at some kind of a rotation? The same thing on a weekly. We see on a weekly, we found support at a 100-week moving average as well as the lower edge of the Bollinger Band. Although, again, the stochastics, the momentum is down and MACD has crossed. So we'll see if it at least offers a short-term bounce on the Russell. Last week we said the Dow was leading us. Is that telling us there will be some type of a correction coming? And as you can see, the other indices like NASDAQ and S&P followed. Now we are consolidating in Dow. I think as I mentioned about being oversold. Although we are embedded, MACD is negative, but we are consolidating. So is it possible we might have a little bounce to that 100-day moving average? As far as the transportation, also transportation is telling us that there was some damage done. We had talked about that 100-day moving average, and we broke through that, and now we are embedded, and MACD is negative. So we were saying last week, we said last few weeks actually, we've been paying attention to this volatility and the VIX. And what has happened, I've mentioned it every time we go outside, we usually come back inside the Bollinger Band. It hasn't been an exception, but the interesting thing is the candles are getting wider and wider. And of course, again, the situation in the Middle East, Iran and Israel. And you can see Friday, it was an unbelievable day. When you think about Friday, I was up, I was actually at night, we were looking at the markets and I'm seeing, Dow is down like 500 points. It's a huge movement. And then, as you can see, it all died down because what happened, we were looking at the gold and crude oil and Swiss franc. Swiss franc actually moved almost 100 bases, if I'm not mistaken, 100 pips. It was a big move in Swiss franc. And then we noticed gold and oil, and then they retraced. So that was telling us, maybe the market's overreacted, which usually happens. So you can see on VIX, we went way outside the Bollinger Band and we came back inside. So now we are overbought. And the question is this enough retracement or we will continue, which means the markets could bounce. So, and we can see that on a weekly basis, we mentioned last week, watch this 100-week moving average. So we are against that 100-week moving average, and we are overbought. So close to overbought, and a little bit more at 70. We are at 69.88. As far as the VVIX, volatility of VIX, we can see we did retrace on a daily basis on that one. And now the yield, obviously, they have been a culprit. The question is, with the inflation numbers, again, what happened? Are we going to have a cut in June? Some people now moving to September, and there are a few analysts all of a sudden they think we might not even have a cut. So that's why I think that PCE number is important. And then we can see the 10-year. It was interesting that with the 10-year notes, we see that we stabilized. We've had some, even on Friday, you see that big movement that was more of again, safe haven movement with what's happening in Iran, and the bonds, the notes became a safe haven, but you can see that big wick and that retracement. So basically, they were content with what happened, and they felt the risk. Yeah, we're done for now. As far as the 30-year, it's a similar story. We are embedded as far as the downside. And the dollar, obviously, it was another safe haven, and it made move, and it hasn't really retraced. And we are embedded. And also, you have to remember, one of the reasons for strength of the dollar is basically because the other currencies are not in a raising interest mood, that the interests are going down. So we are offering the better yields. When we look at the euro, you can see the story, although we are stabilizing a little bit, but we are still embedded. As far as the gold obviously being another safe haven, and you would think with the interest rates staying up, going up, gold will react, and you can see no, gold has become a safety net and attracting the money. So they might be a tidbit overheated, in my opinion, although we are getting close to that overbought. We see this divergence. MACD is still up. So when I look at the weekly side, I can see that we are overextended. So that doesn't mean we short this market. It's just if you're a buyer, I would wait to come inside the Bollinger Bands before making any moves. So it's been pretty nice few weeks, as you can see in the gold. Silver also has done very well, although again, we are overbought. And again, another divergence in silver. And on a weekly basis, we see 3 weeks outside. Copper, another story we can see. We talked about the mining and what has happened. We are embedded MACDs positive. We've touched that Bollinger Band a few times, but they're expanding. On a weekly basis, though, we are way outside this Bollinger Band and we are overbought. So let's be a little careful. So as I mentioned, I would not go long at this time, wait for retracement. As far as the Bitcoin, as you know, April 20th is a halving day. A lot of stories have gone about that. And what we see is we actually went to our support. I would say 60,000 was our support Thursday evening, or yeah, but Thursday we did have that support. And then we are basically now oversold. So can we go back? We talked about the story about 30 days after halving. Generally markets up about 15%. Generally they move up, except last time, so 4 years ago. So basically, it was it 2016? I think it was 4 years ago when we actually didn't bounce, but in the long run we do bounce. Is it possible that we already had discounted that? So but anyway, we do look at this more of a consolidation, more news out. Even Ethereum, I want to take a look at it. It doesn't have the story of Bitcoin, but it's a coattail of Bitcoin. You see, we have this 100-day moving average as a support. So although we are in a becoming embedded at this time, we'll see if there is a nice bounce, at least from support point of view. Now, crude oil, this was something I was really watching. Look at this big move Thursday night and then Friday, obviously. And that was giving us a message that the markets now, they are ready to consolidate, in a sense that the fear is gone. So unlike gold, the crude oil has actually retraced, and now you're close to the lower edge of the Bollinger Band. As far as expected move, big move on S&P, especially on Friday. You can see we went outside the expected move. NASDAQ, the biggest mover. We haven't had this in the long run, but long time. You see that when you look at all these expected moves, since about November, October, we haven't had that. So this was, yeah, could it be inflection point? Again, we are looking at the different sectors and different indices now. As far as Russell did go outside and then bounce back and hit the lower edge of the expected move. The bonds, safe havens, Friday, they came back inside. As far as gold, actually went outside expected move. Silver, right upper edge, close to upper edge. And then the financials, it's interesting. We are concerned about the with the commodities, we look at concern about the geopolitics, but what we'll see is financials actually had a strong Friday, the money flow in. The same thing in energy, we did go outside and we came back inside the expected move. So I hope this was helpful. Thank you very much. And we will move on to our second episode about emerging markets and lesson of the week. Thank you.